Investors and traders, welcome to the channel. Market chart pattern today is 6th of July 2025. Hope everyone is having a fantastic weekend. A big belated happy 4th of July for my American subscribers. As always, this video will be for educational purposes only and it's not a financial advice. This is going to be a little bit of a shorter video while I'm recovering from the bit of illness that I had. So what I did was I also put a bunch of charts on the Substack, which you'll be able to find the link to the Substack in the description. It's marketchartpattern.substack.com. You'll be able to actually look at the article, all the charts that we have over there. So that will be one way to take a deeper dive into it because of the short time for this video. Apologize for that. Last week was a really good week for the US equity markets. The key markets such as S&P 500 and the NASDAQ 100 cash, they all made new all-time highs. So we have had a target of about 6,500 on the S&P 500 cash. The markets got to 66,279, so it's not too far off. And then last week we were also discussing the possibility, because the markets have risen so much in such a short amount of time since the bottom came in on the 7th of April, and this is a V-shaped recovery. Quite a lot of actually big players, they are kind of waiting on the sidelines to see what sort of policy will shape up with regards to trade. One of the things is that the big beautiful bill, now that is out of the way, it has been approved. So that stuff is crystal clear now, or the kind of stuff to look at in terms of taxation. But what it also means is the market has gone up really too quickly. So I think during the summer months, we are likely to see the market move into more of a trading range behavior, meaning consolidation. While till the end of 2025, I am looking for higher prices, and 7th of April low being a really, really key low. So I'm not really expecting major kind of moves to the downside or anything like that, but more like markets begin to digest these gains, consolidate over the summer months, and we have key timing coming up towards the end of August, beginning of September. So maybe in the October timeframe, normally the markets find really good footholds, and we have normally seen in 2022 a bottom come in a third week of October, and then similarly in 2023 as well. So so that time frame is when the markets are really beginning to move for the end of the year. So that's the kind of the overall picture that I'm looking at, and what we can see is that this is the chart, the histogram, which shows how the markets actually performed in terms of the global indices that we like to follow here. Very interesting was the VXN, which is the volatility index for the S&P, for the Nasdaq 100 stocks. And it's very similar to VIX, but it's particular for the Nasdaq 100, and it was up by 3.07% last week. So perhaps some players were taking some protection, which doesn't normally mean a lot of volatility, but what it means is that maybe there are players which are gearing up to take big positions, perhaps directional positions in the technology sector, so Nasdaq 100, and then they might be actually trying to protect themselves by some options activity. So that is another way to look at this. And then we had the Dow Jones Industrial up to 2.3% last week, followed by NYA, which is the New York Stock Exchange Index. This also has ADRs, so about 1,500, 2,000 stocks roughly. That was up 1.9%. That shows that there is participation coming from international stocks as well, which are foreign companies but listed on New York Stock Exchange. S&P 500 being up 1.72%, and followed by NASDAQ, which is up 1.48%. And if we just take a look at some of these indices which did not do performed that well. So the Hang Seng was down over 1.5%, followed by the German DAX. Now the German DAX, I'll just show you the chart, is actually performed really well in 2025, but last week it pulled back about 1%. And the India's SENSEX, it was down about 3/4 of a percentage point as well. Now this is the year-to-date chart. We can see that it is actually South Korean index, the KOSPI 200, which has done extremely well, and KS11 is also a South Korean index, and has done extremely well as well. Followed by German DAX, which is up nearly 20% on year-to-date basis, and the Hong Kong's Hang Seng index is very close to 19.22%. But here what we can see is that the major indices that we follow for the US, they're all back into the positive territory, and the volatility has moved lower, with VIX down minus 5.59% and the VXN down minus 2.26% for the year-on-year to date basis. So that's really a positive improvement of the lows of 7th of April. The US indices have bounced back. They're all in the positive territory. What a nice way to celebrate the 4th of July, with the indices, making, some of them making new all-time highs and being back into the positive territory for the year. Now the charts here, these are for the sectors. On the Substack, you can go into the deep, take a deeper look at it. But what we can see on the week-to-date basis, which is the weekly returns for the last week, one which is really stands out is the KRE. Now KRE is the Spider S&P Regional Banking Index, and yesterday I've actually done a video on the banking stocks and ETFs, and the KRE is part of it, and this particular pattern that we are watching in there. So I would highly recommend you to actually watch that video from yesterday. It's part of the financial services. It was up 6.36%, so that was fantastic performance. And then we have the XRT, which is the retail ETF, part of the consumer cyclical sector. So that was up 4.24% as well. So perhaps this is a big beautiful bill, the anticipation of it passing through, perhaps that might have something to do with that. But these because the retail was not performing that well, but positive news, or positive returns coming out of it last week. So that's an interesting one to watch actually. And then we have the home builders, XHB, part of the consumer cyclical sector as well. It was up 4.2%. Then we have XLF, for example, being up 2.41%. We have the technology doing pretty well as well, with XLK up 2.47%, and there are a number of them which have actually performed quite well. But the outstanding one is the KRE, and then the retail. And if we take a look at, and there, sorry, I forgot to mention, there is one which is this XAR, which is Spider S&P Aerospace and Defense ETF, part of the industrial sector. It was down slightly. This is the only one actually we see which is down last week. Otherwise, pretty broad participation in the rally for the stocks. So year-to-date basis, what we can see is the best performing is the XAR, which is the Spider S&P Aerospace and Defense, part of the industrial sector, up 26.23%. So if you look around with the geopolitical situation, be it in the Eastern Europe with Ukraine, be in the Middle East, there is a lot of ammunition which is being used in the kind of wars that have been going on. So perhaps that could be one of the reasons why in 2025 we see this sector seeing quite a good performance. Money moving into these because the companies which are related to defense sector, they're likely to benefit with perhaps new orders coming in for self-defense from other countries and stuff like that. But this one has been an outstanding one. And then we have this one, which is the industrials, the XLI, which is up 14.1%. So this is the one industrial, 14.1%. And then if we take a look at the communication, which is up 12.2%, and then the IYG, which is financial services, ETF, kind of similar to XLF, and that has done really well as well. So you can see there's a theme in here. If you just take a look at this, financial services, financial services, financial services, then we have the industrials, industrials here, we have communication. So it does look like um, in 2025 the kind of theme we are looking at with the policies that are coming out, that it is the industrials, financial services and technology sectors which are going to benefit from these policies in 2025. So these are going to be the leading kind of the sectors. Industrials, especially with the defense one performing really well, and then we have financial services doing quite well, and then of course the technology is catching up as well. Now the ones which haven't done that well is the healthcare. It's down 0.65%, and then we have the consumer discretionary, so the part of the inflation might be impacting that, so that hasn't done that great. It's down by about -1%. And then the energy, so the energy hasn't performed that well, but within the energy it is actually the oil and gas exploration and production, that ETF XOP, that hasn't performed that well. And then we have the home builders, maybe with the kind of um, big beautiful bill with kind of the reduction in taxation that might help this home builders, and perhaps if later on in the year, which we think the Fed is actually likely to begin to cut rates, that should be uh, that should be good news for the home builders as well. But one of the things how the markets work is the markets will actually anticipate future movements. Markets are forward looking, and what it means is that these sectors will actually begin to see money moving into them. So we'll keep on watching our list really, really carefully on daily basis. I'm putting these on as well. Then on a weekly basis we actually take a look at these on the videos here. So keep on watching this space and how these ETFs returns will move. And then I have this section where I actually watch for the stocks which are outperforming the S&P 500. So the S&P 500 return was 0.83%. This is last Thursday. Friday was a holiday, but these stocks actually they perform better, such as now is basically service now. It's made this list, the weekly and the monthly list as well, so the stock is doing quite well. Now the daily time frame is actually quite noisy because these things will change, and these are just the top 10 stocks anyway. So it's really good to keep on watching this and see actually the trends. But here the interesting thing is the sector. Look at this sector: technology, 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 industrials, technology. So that's giving us a kind of the picture of how these stocks are moving in terms of sectors. So the money is coming in the technology. Technology is likely to perform quite well. Now if we take a look at the weekly returns, then again technology, 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 some of these names are there. So Oracle has actually started to do quite well. One of the things with the Oracle is that they are doing, especially the co-founder Larry Ellison, he has kind of changed his strategy. This is something I was reading about and doing some research on Oracle. He used to buy back a lot of stock himself, so he was actually wasn't selling the stock. In fact, he was buying back the stock personally, so his ownership was increasing. So kind of like the share buybacks, but at personal level. Now he's kind of shifting the strategy. Rather than buying the stock back, he's actually spending the money. So it's like a more capex, which is happening. This is what some of the other tech related companies do, such as Facebook. They will do acquisitions, spend quite a lot of money on acquiring companies, getting into related verticals. So that's the Oracle being a very kind of a defensive stock. Database technologies, they moved into the cloud, doing a lot of spend in that, and they have the TikTok part of it as well, I think, in terms of the database. And then they're moving towards the artificial intelligence side of things as well. So they deal with data really the groundworks of it, and then they are moving into the bigger themes such as cloud and now the artificial intelligence, data centers, that sort of stuff. So this is why we are seeing one of the reasons why the Oracle stock is moving. So this is really a key stock to keep on watching, and I'll add this to our list of technology stocks along with Circle as well, which is stable coin as well. So crypto is an important part. Healthcare, Moderna. Okay, so that's healthcare we have seen on a year-to-date basis hasn't done that well, but good to see one stock being there. Then we are seeing consumer cyclical stocks as part of it. Now, Estee Lauder, it's a really interesting because this stock has been decimated. I was actually taking a look at this myself a little bit earlier on. Let's have a quick look at this. So ES, Estee Lauder, what's the symbol for this one? EL. And here we go, and it has actually made these lows. It's gone past its IPO lows, going back way there. On if we have to take a look at this on the weekly chart, I believe. Here we go. Here we go. So it hasn't done that actually, but you can see that it has lost close to 80% of its value. Here we go, and let's see. If I bring up 78.6%, so it's actually trying to claw back to the 78.6% retracement. But the interesting part is taking, technically speaking, is taking this swing high out. So we'll keep on watching this. If the accumulation, the Vyckoff style of accumulation, the way we have seen in the Roblox, that begins to come back into this, then it'll be an interesting stock to watch. Because I watched this space for Michael Burry, and apparently he's only long this stock. So I think this is another reason to pay attention to. So we'll just keep on watching it for our channel here. Then on a year-to-date basis, you can see Palantir up 77.65%. NRG, this has been making the list, and these are top 10 stocks only, by the way. So I think I'll increase the list to top 25 or something like that. Seagate, one of the old companies, is interesting to see. So maybe their technologies are being used to build up the data centers, perhaps. So that might be the reason. Newmont is of course gold. GE Vernova, it's been there for consistently. Uber is there up 55.2%, and then CVS is here's one of the anomalies, which is healthcare sector being there. So now let's move into the markets. So in the markets, we have this dollar. We think we are in this CD leg lower, and it's got a little bit further to go to the downside. However, on the daily chart, what we are seeing is, because it's 1.618 expansion at 96.10 level, we have seen some sort of a bounce come in. There's a possibility it could rise into this level, which is roughly about 97.50 to about 98.20 level. It could get into this, but this is where the bearish symmetry is. So the market, I would imagine, will find quite a lot of resistance there. Now, one of the other reasons I'm thinking that some sort of rally is coming before we actually begin to see resumption in the CD leg is because some of the key patterns that we have been watching, the Euro USD and the cable, which is the British pound, they have actually been completed or near completion. So there is some element from there, and dollar index is of course also has other currencies such as Canadian dollar. To smaller extent, the majority is about 50 to 52% is euro. And then if we take a look at this, the dollar index on really long term, this is the monthly chart. Look at this symmetry there. So 10 years, 12 years, this is when the dollar topped, and I believe the dollar might have actually topped right here as well. However, right here around the 94 level, 93.88 is completing this really nice one-to-one price projection ABCD pattern, right at the 50% of these lows right here. I've taken this low of 2011, which is I think when the bull market and the dollar began in earnest. So it's completed. It will have the 50% retracement there. So it's going to be a pretty strong level to watch, and I think that's when we can see a nice amount of rally, which could last for a few months at least. We are going to see that come in and retrace at least the 38.2% of the CD leg. So that's around 94 level roughly. This is why I'm thinking this market could actually head down a little bit lower to 95 to 94 on the dollar index futures. Cable, so the cable we were watching for 138, we missed the exact top by about 30 pips, and then we had this 1.618 little bit expansion from this swing high to this swing low, and we actually saw last Wednesday the market close or down by one big figure, which is 100 pips and more, and really find support from the 20-day moving average, kind of consolidating right here. So this is another reason that I'm thinking that maybe it doesn't go far beyond the 1.38 level. We begin to see more sort of consolidation, maybe a touch to 1.38, and then this is where the British pound actually begins to top. So I think this is going to be the one of the weaker currencies versus the US dollar, when the US dollar actually completes that 95-94 level, and then your USD is stronger than the British pound, but it's also completed about the hour pattern of 1.1750. Now we are just watching this. I think it's just going to oscillate between 1.175, 1.18 to even 1.20. Maybe if it goes into distribution, this is the kind of pattern we could see some sort of a double top pattern being formed. But right here, just no reversal at all. But it has completed the ABCD right there. And then on the daily, you can see that it's got 1.618 expansion, a little bit higher. So I think it's going to be more of a range bound affair for the euro, and it could rise a little bit as well. Really range bound market for the Japanese yen, so nothing to talk about too much about it. The Bitcoin remains supported above the 38.2% retracement right here, and I think it's got a chance to actually reach our targets right here. And then if you long time subscribers will know that we have the Lucas time spiral, which is actually from a timing perspective, the timing is supportive for the Bitcoin to rise, and that timing is there for quite some time to go as well. So I think Bitcoin is likely to perform quite well, especially when the dollar weakness materializes in earnest. Slightly higher target on the weekly. Now, really interesting were the debt markets last week, because last Thursday we saw a jump in the yield for the 2-year Treasury note and also in 10-year. But what we think is that right here, if you just look at this blue lines right here, this is the bearish symmetry. I think it closed right towards the resistance level, and most likely, if we don't see a follow through where the yields move higher, we are likely to see a consolidation to the move to the downside. And what we think is that as long as this 4.63, this entire region zone is not breached to the upside, it's pretty strong resistance level. We could see the yields actually move lower, as low as 3.2 to 3% on the 2-year. And this is the triangle pattern. It's gonna break either way, and if it just breaks as double bottom, triple bottom, then it could be a pretty sharp move to the downside. Right now the 200-week moving average is kind of given support from a technical aspects, but look at this trend line, 1, 2, 3 touches there. So we'll see which way it breaks out, but the chances are to the downside, so yields moving lower. On the 10-year Treasury note, pretty sideways market on the weekly, but on the daily chart, just like the 2-year, we saw a rally last Thursday, went right to the 38.2% retracement. We also have the 20-day moving average right there, and then if we take the market symmetry concept, which is the bearish symmetry, because this is the blue line shows the magnitude by which we had seen a previous rally, which actually didn't go anywhere. So unless we see a follow through to the upside, the chances are this could actually move to the downside as well, and it could actually head down which we believe, if it continues to move down, we could actually see this ABCD, which is in the red dotted line. We could see 3.7%. That remains possible. The only way is that if this resistance right here is broken, then the pattern is totally different, and higher yields to come. But right now, I think what the bond market is telling us, lower yields. Even it'll be really interesting as to watch the next couple of days after the bill has actually gone through, how the bond market is going to take it. And if we don't see the yields spiking up, then I think what it means is that the bond market is giving us a signal that it's kind of accepting those cuts in the taxation and a few other things there. And if the bond market, which is much bigger than, especially 10-year treasury, is much bigger than the stock indices, it takes this well, and the yields actually move lower, that's going to be a pretty good bullish sign for the risky assets. And on the long term, I think we have a chance to hit this dotted trend line. This shaded region represents a big pattern formation. We have seen the market move lower, but it's still got a chance to hit this 38.2% retracement, because this is really long bonds, 30-year duration. The risk is quite a lot, so the investors would actually demand higher yields as well. This is why we see a steepening of the yield curve, where the yields on the lower end of the curve, such as 2-year, moving down faster, and then kind of middle in the 10-year, and then the 20-year plus duration to 30-year, the yield steepening up. So that's the steepening of the yield curve. Okay, so the gold was really interesting last week, because last week we had drawn this possible support zone right here, and what happened the next Monday was market came really missed at the top boundary by 50 cents, but I think it's just close enough, and then the market actually rallied over $100 per ounce. So as long as this support zone is held, we have a bullish view for the gold market, and the possibility that we could be in this blue 1-to-1 projection higher, could see the market go to about $350 per ounce. And on the weekly chart, this is how it's looking. So consolidation right here. On the monthly chart, we do have higher targets as well, but you can see there is like quite a lot of coiling going on. This is we have had 2 consecutive months which are inside this month, which is April. So there we go. So month of June and month of May, making inside bars. It doesn't mean that I cannot hit these targets, which is top boundaries right here, but this is what we are looking at. Silver is improving. There's more strength coming into the silver. Otherwise, the silver wasn't just performing as well as the gold, but now I think there is movement coming in. And some of the other metals as well, such as platinum, that has been doing quite well as well. Then we move to the world markets. This is Hang Seng, or just kind of in this trading range. Just need more strength to move, or it might just be a pattern that could pull back. The 20-day moving average is supporting it. India's Hang Seng right into this resistance on the weekly. And I think it's just likely to consolidate more into this region, and this is our target was this upper boundary. 78.6% retracement market has reached that, and now it's just consolidating. German DAX, so last week we're pretty bullish because it had closed higher like this, but it didn't go anywhere. It just went sideways. It's a disappointing price action. I think more consolidation coming in. And then this is the kind of pattern which the US markets can go into as well in the summer months. So I think the Europe is getting a little bit weaker. Maybe there is some profit taking here, maybe some repatriation back into the US indices as more and more clarity comes from the tariff aspects. And then, of course, with regards to the big beautiful bill, so the US markets remain very attractive. So that could be another reason. So we could see more of a range bound market here. And remember, German DAX has been is nearly up 20% on year-to-date basis. And on the monthly chart is reaching upper targets as well. UK's FTSE remains range bound, so nothing much to talk about there. And then let's take a look at the US markets. This is the S&P 500 cash SPX. SPX made new all-time highs. It's got a chance. What we were talking about last week was more of a consolidation to sideways market could be upon us. However, we were also looking at the possibility whether we get to the 6500 first or we consolidate. So the chances are that we could actually hit the 6500 first, and we aren't too much far away from 6500 now. So that's going to be an interesting one, and then maybe the market actually begins to consolidate, go sideways, maybe pull back a little bit, digest all these gains. This is something I've tried to show here. That what we are looking at is, if you just look at this on this chart, this is the 7th of April lows to these recent highs. This is about like 29% gain, and getting to the 6500 about 35%. That's a V-shaped rally that a lot of big institutional traders might actually not even believe in, but with more clarity coming in, I think they'll be watching for the sidelines, not being in the market yet. So any sort of pullback would be actually quite good opportunity. But what I'm really thinking is more of a sideways market after we hit the 6500, that maybe around that level. Here you can see that this is just the daily chart. Then on the futures were really interesting. Futures have opened up now, they have opened up higher. But last Friday, because the cash market was closed but the Globex was open, and we had about a 50-55 points moved to the downside in the S&P 500 futures. So I think we are getting more clarity. It could still hit these levels there. Momentum is pretty strong, so you can see this is what we saw last Friday. But the futures have opened higher. This is what is NASDAQ 100 on the weekly chart. It's getting into this region where it completes this big ABCD. This is where I'm thinking maybe begins to go more in the consolidation sideways. This is what we are looking at in the NASDAQ cash. So one interesting thing I just want to highlight is right here on the 7th of April, this is when we began to talk about that, okay, there is a possibility that we might have seen the lows for 2025, so long-term subscribers will know about that. And then when this 21st of April happened, this is when I actually quite openly began to talk about the completion of this ABCD, because right at the 7th of April it was a really completed pattern both in time and price. So when price meets the time, the pattern is complete. This is coming from WD Gan. So we have this ABCD and also timing coming in. It was a perfect completed pattern. This is exactly what had happened right here on the 5th of August as well in 2024, and we saw a really nice rally, and we have already seen the rally which has actually taken the index and also the S&P 500 above the to the new all-time highs, and as we have got further targets to go. The Dow Jones Industrial is also catching up, but I don't think it has made the all-time highs now. We can have a quick look at the NOYA, which is the yeah, there you go. So even the New York Stock Exchange Index has made a new all-time high, so that's fantastic. I think it's got a little bit further to go. While we are at it, let's take a look at how the Nike stock did, and there you go. This is something I had actually posted about in last week's post on Substack, because it was completing quite a lot of these patterns around the 51 mark. So this is really interesting. I think if it begins to get above this swing highs, and in particular this swing high, that's gonna be a pretty nice one, but that's gonna be about $40 from the bottom. And then if we get like an ABCD, so something like this, I don't know exactly it will happen like this or not, but if we could get something after it's taken out this, and ideally this swing high out, something like this, then that would be a pretty bullish thing to take a look at, and provide a tradable low where risk could be defined, position could be taken. Again, this is not a financial advice, right? So because I thought it had a little bit further to go, but with this kind of strong move coming in, it's possible we might have seen a pretty good low, but the long-term cycles, they're bottoming, it appears. So we could get some sort of a move like this, which will be quite interesting to take a look at. So this is what we are watching in the key markets. So thank you very much for watching the video, and if you like our technical analysis, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will not miss any new videos. you'll get a notification. And if you learned something from the video, then please do hit the like button. It means a lot to me. It just encourages me to keep on doing more videos for you guys, and you find them for educational value. So thank you very much. You'll be able to find the charts on the Substack. It's free. Just hit that button. You'll be able to see these charts. The Nike chart is not going to be there, but you'll be, if you go to the last week's post, last Sunday's on Substack, you'll be able to also get the Nike chart. It's just free. If you want to subscribe to Substack, that's great, because some of the time sometimes I was just not able to make a video, but I'm able to post charts, which I do as well. So thank you very much. Good luck, good trading, and speak to you guys soon.